Welcome to the Paper Trail, where we follow the journey, my journey, through the world of a CEO of a mortgage note fund. I'm Chris 70, and after years of buying, managing, and selling notes with 70 investments, I'm here to share the real stories behind the deals. What went right, what went wrong, and what I wish I knew earlier. From non-performing loans to seller financing to private lending, this show is about more than strategies, about growing your business, learning to follow the paper trail, and doing the due diligence that separates the pros from the rest. Now, let's hit the trail running. Welcome back, everybody, to another episode of the Paper Trail podcast. On today's episode, I want to talk about title insurance and start with, I was reading an article during the holiday season by Marco Bario. And if those that do not know Marco, I 100% feel that you should sign up to his newsletter, Seller Financing Sunday. He sends it out every Sunday like clockwork. Marco, somebody I highly respect in this space, known him for several years. And Marco is one of those individuals who goes out and does what he says he's going to do, but also provides a ton of valuable content for people out there in the industry. And I find that valuable because his philosophies, I think, to me, is similar to mine, which is he is providing a lot of content and information for people out there, but not monetizing it in the sense of charging people for this or that. He provides that content out there to people for branding and building his business and providing that content that shows he is an expert in what it is he does. And I've had him on the podcast in the past, and really interesting story about his background and where he, the industries he came from, and moving California back to the East Coast. So I want to give a shout out to him because I also want to dive a little bit deeper into this article that he provided. And again, I recommend you reach out to him to get this full article because I'm going to share my experiences about title insurance and not to undersell it when doing due diligence on a note, because he goes in and describes really what an owner's policy is, what a lender's policy is. I'm going to touch base briefly on those, but he goes into so much detail on it. It's extremely valuable. So go reach out to Marco, sign up for his newsletter to get that. And the reason why I also wanted to bring up this topic is over the past 12 months, or in 2025, there has been a significant uptick in the types of activity that would require title insurance, including those that involve fraud. And we, as a company, actually have several title claims out there. And one we believe was due to some fraud by a third party who is in the process now of also getting sued by one of the largest private lenders across the country. And that one is going to be a really interesting case in that sense. And essentially, payoff went to the wrong entity. I'm not going to describe because it's still a legal action right now, but let's just say title company sent the money to the wrong individual or the wrong lender, or they weren't even a lender, did not send it to the lender, and we still have a lien on the property, whereas somebody else bought the property and believes that they own the property free and clear, which they don't. And title companies now are involved back and forth in how to resolve this issue. And the interesting component is, so far, it doesn't appear anybody's gone back to the closing agent, who was the one who really made the big mistake on this, as well as the other party involved for quote unquote accidentally sending a payoff for a loan they don't own, but they've done this over 50 some odd times. So they make a lot of mistakes, I guess. So that's just one example, but we've seen a lot of other examples where things have occurred. And before I dive into all these case studies on these, let me rewind, take a step back, and talk about a little bit what title insurance is and describe why it's important in the note space. And if you don't have it, is it a problem? Okay. So let's first describe what title insurance is and what it's not. What it's not is insurance on the property, meaning the property burns down. Title insurance doesn't help you. If a hurricane blows through, title insurance does not help you. There's two types of title insurance. There's an owner's policy and a lender's policy, and each one protects that respective party. If you are originating loans and providing a note and mortgage, you typically want to see a lender and owner's policy on it. And those policies, I will note, remain in effect throughout time until that loan has been satisfied. So if I originate a loan and then sell that loan, title policy is still valid. And it's important to understand the difference between the owner's policy and the lender's policy. And again, we'll talk about that a little bit later on as well. Now, what are some of the things that it can protect people from? A owner's policy, so if you own the property, put yourself in a borrower's shoes, can protect you in case of spelling errors on the deed, which I've seen a family member have, that they had to have their title policy re-recorded deed. And the one thing I'll mention with all of these is when you enact the title policy, unlike traditional insurance where you have deductibles, there's no deductible in regards to, I have to pay this much to get the insurance coverage. It's already covered. Now, it does have limits, but in those instances, the title company will deal with it. So again, here's an example. I'm at a family member whose name was misspelled on a deed, and they wanted it corrected. So they had title insurance go back and get it cleared up. And the reason why they wanted to get cleared up was they were getting married, changing their name, and the prior deed, they couldn't show proof that was actually them because the name was spelled incorrectly. So they had title insurance go back, correct the deed into their name, so then they could then further change the deed into their new last name. Sounds simple, but something like that still costs a few $1,000s sometimes to get all of that cleaned up. And it was at no mistake of the borrower in that instance. Others we've seen is liens getting placed on properties where it was accidentally recorded in error. So someone else, a neighbor, gets a lien and accidentally gets recorded on your property. Where I've seen this happen is in some rural areas. Sometimes they reassign your address. I used to live at an address called 65 Holly Lane, and they changed the address to 71 Holly Lane because of some of rezoning or whatever. I don't know. So now I have a new mailing address, which creates chaos because, of course, all the old mail still goes to the old address and you have to change everything. But what happened, I know, to one of our neighbors is somebody else got a loan and it got placed, even they didn't look at the parcel number. They just put it on the number, created chaos. Title insurance, I would have to come in and fix all of that. Okay. These are kind of some of the softballs. As a lender, the biggest error that we typically see is incorrect legal description. And an incorrect legal description can create havoc or chaos if you're trying to go foreclose. Because, especially in judicial state, you have to make sure that your security instrument is against the correct property. And we recently had a property in Pennsylvania that the closing agent attached the wrong exhibit for the legal description. Now, let me explain typically what happens a lot in a security instrument, a mortgage or deed of trust. Within the document, you have to put the legal description. Typically, what they do is, because every state uses standard forms, and like, the first page gets filled out and there's an area on like page 7 to put the legal description, usually they just put C Exhibit A, because it's easier than having to type it all in, because usually you have the legal description already from the title company on a separate document. So instead of having to type it all in, they just attach it in the back to a C exhibit. What happens sometimes is these closing companies are closing a lot of loans each day. They accidentally insert the wrong Exhibit A's into, or the same one, into multiple closings. Error on their part, but creates havoc and chaos. And this happened on one of our loans. Now, we picked it up during due diligence because we always have attorneys review the documentation. So we knew this going in. So we faded our bid because of this, because we knew it would take longer to get it resolved. Because the document we had to do was called like a reaffirmation or reformation of mortgage or something along those lines, to basically get cleared up to say, hey, look, the borrower actually doesn't own this property. Here is the correct description, but you still have to go through title, and it's going to take 6 to 9 months in many instances. I know in Georgia, it's $5,000 to clean up title, to file a title claim. In this instance, there is title insurance on our side. Thankfully, we actually didn't have to do it because we reached an agreement with the borrower on a resolution and workout and got them to sign some documents instead that basically allowed it. But if that borrower was not friendly, then it would have caused a lot more havoc. Okay? So that is a common area where you see lenders' policies. The most, I believe, is on that item. Another area where you've seen it a lot previously, back in the day with first and seconds, where borrowers are getting, I'll call it like 80-10-10 loans, where 80% first, 10% second, 10% down. Sometimes that second position lien would actually get recorded prior. That's another item. Or the mortgage getting recorded before the deed, again, creates an issue on title. That is something that would need to have title insurance fix. We've seen many, many different areas with title claims. We've seen everything that we just showed. Again, on average, it's going to cost you $5,000 and lose about 6 months of time in order to clear up this stuff. Now, if you have title insurance, it will, of course, handle it and handle it at no cost. And the biggest loan biggest title claim that we have ever faced, and this is an interesting one, and this is why I think it's so important to have title policy. And when I started 7-8 years ago, I'll be frank, a lot of the CFDs we were buying did not have title policies. Those balances were very low. You could fix them, wasn't a big deal. My mindset changes over time when you see what can and can't go wrong. We bought a non-performing loan. First position. Borrower had several properties, files bankruptcy, Chapter 7. Trustee sells the property and sells it for basically, I think we're owed $800,000. I think they sold it for like $750,000, so we weren't going to get everything. The loan that we had was, let me rewind a little bit. The borrower originally took out a loan many years ago, called for $750,000. Turned around, then got a new loan, a second loan from another borrower for about $400,000. So they're in it for like $1.1 million. A new lender came in and refinanced that first position loan to basically give them a better rate, refinance a first position loan. And when you refinance a first position loan and it's of similar characteristics, that loan slides into first position typically, even though it's recorded after that junior position. And this is, some caveats that most people think, oh, first in line gets first. No, you can, if you have your house right now and you have a line of credit, you go to refinance your first, no bank is going to refinance you and let that line of credit get in front of you. And there's sometimes a subordination agreement by that line of credit that's also signed to say, yep, we acknowledge as long as the amounts haven't increased from the amount of the balance or certain characteristics. It's basically, I use the term rubber stamped. But a lot of times by law, you don't need that subordination agreement. It's allowed by law, but banks like to typically be on the safe side and still get it anyways. Which in this case, the lender refinanced them. It was a trust that had that second, got the trustee to sign off on it as well. And then, of course, in the bankruptcy, that second position got completely wiped. So they file a lawsuit saying they're in first and, their trustee screwed up, all this stuff. This suit has gone on for more than 4 years in courts, back and forth, based on appeal. We'd win, they appeal. They lose, they would try and appeal again. But of course, the court systems are so slow. But from a legal perspective, I am guessing our title company, based on kind of the length this has gone on and the legal and the trials and everything, has spent $250,000 defending this case. It's my guess. I don't know the full number, but it's a big number. So imagine if I didn't have title insurance and I had to engage an attorney to fight for my first position rights on this. How much money I would be out the door. $250,000 on a $750,000 loan. Imagine if it was a $500,000 or $400,000 loan. That's a big nut. And that's why title insurance, in my mind, today is so critical. Because you're seeing so much fraud out there. There's a case out there right now with a company that was originating loans in second position, and they're allegedly were taking the title reports and whiting out like the first position loan. So the bank that was giving them money because they were getting note-on-note financing thought they were in first when they were actually in second, and gets completely wiped out. Complete fraud. In that instance, nothing they could do, from a title policy would not save you in that instance, but it's just showing the amount of fraud that's out there just continues to grow. Other things people have heard about are people just signing deeds over to other people and saying they own the property, especially on deceased. We saw that, and I think in Pennsylvania, where somebody was going around finding out who died and just forging names to record the deeds in their names. Again, title insurance would cover all of those issues. So that is why I truly believe title insurance is so important. One other component I'll mention is title insurance. So we're going to dive now. I think you understand why it's important. Now, the last thing to look at when you're buying notes that do have title insurance, first, check if they have it and ask, hey, I don't see title policy. Is there a title policy on this? Contract for deeds, almost never going to have it. Seller finance originating notes should have it. And then institutional paper absolutely should have it. Seconds, a lot of times they don't. Proceed with caution there or review. So you're doing due diligence on a note, you get it, and you see the title policy. What are some of the things to look for? One is, what's the insured value? And I've seen some places where people modified loans, increased value, or had construction loans, or updated certain things and didn't increase the title insurance. So that's something that needs to be considered. That's kind of an advanced strategy of if you're doing certain loans, you want to make sure that the coverage is enough for the loan. I've seen lenders that we bought notes from, $250,000 note, for some reason only have $90,000 in title policy and money. It doesn't make sense, because if there was a major issue, you're not covered. For example, if that property finds out that somebody else had a claim to it, or they sold it to multiple people, and you paid $250, or you originated for $250, you're only getting $90. You're only getting what's the claim back. So understand the numbers, or what the amount is on the policy. And then understand the exclusions. Those are so critical and important. We saw one that, this was crazy. It was in Tennessee, and I'm saying here, I gotta make sure I'm thinking about this properly. The title policy excluded any unrecorded agreements with any tenants or individuals living in the property. Okay, I'll say it again. It excluded any unrecorded agreements. Now, what are some unrecorded agreements that somebody might have with somebody living in the property? Lease options, contract for deeds. And lo and behold, the lender started foreclosure. And when they did, the borrower had their attorney go record the contract for deed, which was half the price of the amount they owed on the note. So they owed $150,000 on this loan. They were selling the property to another person for like $75,000. So they clearly were never going to be able to sell this property to this person. Now, interestingly enough, title insurance wouldn't cover that. And if I would have bought that loan, I still would have had to honor that agreement. Plus, I would have had to turn around and sue that current lender. So we never bought that loan because we saw that recorded CFD down the line, which just raised so many red flags. But also, when you look at those exceptions, you want to make sure you understand them. Other exceptions could be other loans on the property, taxes that have to be paid off, easements, other types of agreements. You want to make sure you understand what it is in that policy. Don't just take it and say, oh, there's title insurance, we're good. Because there's going to come a day when you're like, oh, I need to go implement it, and realize, oops, there's an exception based on what it is you're trying to get resolved. So it's important to understand what title policy exceptions are. You can throw it in ChatGPT to get, some ideas as well of what's excluded. Don't rely on ChatGPT, rely on your attorney. But I found it sometimes be useful as well to input it into there just for educational purposes. So I know I've rambled a lot and spoken roundabout about title insurance, its importance, why as a lender you should have it. It's not the end all be all if you don't. But to me, it is a kind of secondary parachute, and something I would absolutely want, and something that we typically look for as we move forward in all of our loans. Now, have there been some loans that we've acquired that did not have it? Yes, of course. But let me say you're originating loans, you 1,000% better have a lender's policy if you're originating a loan. If you're buying on the secondary market, like I said, institutional paper typically will have it. Seller financing should have it. CFDs pretty much will never have it. So hope you enjoyed this episode of the Paper Trail podcast, talking about title insurance, title claims. For more information, go to 7einvestments.com, where we've got our webinars and other information about note investing. You can follow us on YouTube. Make sure to leave us a like or review on your favorite listening station. Thanks again for listening. Hope you have a happy, successful 2026, and I will catch you on the next one. Thank you. Thanks for joining me on this episode of The Paper Trail. I hope today's insights help you sharpen your note investing strategies. If you found value in this conversation, subscribe, leave a review, and share it with fellow investors. I'm Chris Sevigny, reminding you to keep doing the work, trust the process, and always follow the paper trail. Until next time.